So joining our series for the very first time this afternoon are special guests Johnny and Markus Kahlbetzer. Johnny, CEO of Twynam Investments, and Markus of BridgeLane Group. Gentlemen, pleasure having the opportunity to have you on the program. Before we get into your investments and what you've both achieved throughout your careers, which is remarkable, I want to take you back to the history of the business, the history of the family business in particular. Johnny, tell us about your father, John. As I understand it, he grew up in West Germany in the 1930s. Give us some insight into the family's background, if you could.
So Dad was born in 31 in Cologne, or Köln as the Germans say. Dad was reasonably well off, but he was sort of without a mother. He was brought up and sort of had another lady sort of acting as the mother figure. Obviously World War II was happening, but Dad was too young to sort of be involved, thankfully. Post the war, he started working, and his dad was sort of a trading background, and he got involved in working for a trading business there, and then in 54, so at the age of 23, decided to leave Germany, and he sort of headed east, ended up sort of stopped off in Bangladesh on the way through, ended up in Australia, in Perth, and a very short stint on an oil rig, and then went to Adelaide for a little while, and then ended up in Melbourne working for Heine Brothers, and the Heine Brothers still exist, and a couple of generations later today. I'm doing a totally different business than what the family started. Yeah.
Tell us about the move to Australia in 54. What prompted that?
I can't tell you. No idea. Like, Dad's never been one really to talk about his life early on. So yeah, I can't exactly what drove it. I can't say.
And so Heine Brothers in Melbourne, and then moved up to Sydney, and then, as I understand it, there were a couple of business trips between Sydney and China. He was one of the few that were allowed to travel there.
Actually, when Dad worked for Heine Brothers, they wanted to do some business out of China, and Australians weren't allowed in China then, but Germans were. So Dad had a German passport, etc. back then, I assume, or however that worked. And so he was based in China for a number of years and sort of dealt with importing steel and exporting soybeans, into Europe to get the steel in, and sort of somewhat barter trading, etc. And then eventually I think they had a disagreement about payments, and Dad left Heine Brothers and another colleague from Heine Brothers, Rudy Meth, and started their own business called Methco at the time, and yeah, for a number of years they worked together, and then Rudy decided to retire, and he retired for a number of years, and then decided he was bored of retirement, and then came back and started working for Dad. So that's sort of the history of business. So Dad's sort of first success was in trading. So, and steel trading. So everyone says I've made money in agriculture, etc., but actually the foundation was the steel trading business. And there's an interesting anecdote, or it's not an anecdote, but a story. So when they traded into Iran, and they had a shipload of steel, and it's when the Ayatollah took over and the Shah got overthrown. They actually had to bribe a harbour master to get the ship out. If it wasn't for getting that ship out, Dad would probably be bankrupt and we wouldn't be here today.
Incredible. So the background in trading, and then the move into what the family has traditionally been known for is in agricultural assets. I read that in, I think it was 1969, there was the purchase of a hobby farm in Picton, about 100 acres or so. Tell us about that.
So it's called Razorback. It's on the Razorback Range. So if you drive from Camden to Picton, you go up and down, and that ridge line is sort of the Razorback Range. And yeah, I can't remember the actual size at the time, but we used to sort of go out there on weekends or Sunday lunches really with Mum's family. We all sort of congregated there on Sundays and sort of had family get-togethers, and that was the first sort of knowledge of anything to do with anything apart from like a country sort of style background. This is what it looks like. Oh, there's a horse, and all those sorts of things. I started horse riding there. Yeah.
Over the next decade or so, Twynam Agriculture steadily grew its holdings, acquiring further agricultural assets across Australia. Tell us about the growth of the business in say, the 70s.
So, early 70s, bought property called Ramornie Station at Grafton and a number of properties sort of just north of Cooma, which we called the Umarella Group, property at Manila called Pembroke, and then after that sort of was a property up at Warrialda called Gunya, and a property at Braidwood, which was Braidwood Station, and then that was all sort of through the 70s. They just sort of ticked on one up, sort of every year or 2 years, etc. And then in 1979 bought Nauru Pastoral Company, which was 7 properties, I think. And Nauru was a Coke Amatil business, and they just sort of, I don't know how they ever got involved with the properties, but they moved out, yeah.
And just out of interest, and you may not know the answer, but how did he go about building the business and sort of financing some of these transactions? Was he leveraging the assets that he held to buy new properties, or they're still trading?
Out of the trading profits of the other business at the time, and then in the early 80s had Bridge Oil business, so they bought a chunk of Bridge Oil, and then the Australian Agricultural Company. He did a bit of corporate trade. He was sort of an early corporate raiding guys, and a couple of businesses he did that on, and then in sort of the mid-80s shut the steel trading business down when BHP wanted to get away from selling steel to actually people working as an agent. And Dad said he wasn't going to be an agent, so that's when that business stopped, and we really became full-time farmers. Yeah, and that worked through to sort of call it 2010, and then we sort of started moving our way out of that.
Markus, I thought we'd bring you in here. The international expansion into Argentina occurred in 1982. He founded a company called LIAG SA in Argentina in 82. What prompted him to see the opportunity in Argentina, do you think?
Yeah, so I mean, it was LIAG, Argentina. Actually, it was a German acronym. I can't remember what it is.
It's like that long.
Yeah, very long one. And it was always the perennial question is, what does LIAG stand for? And nobody could answer it other than him. I think Argentina has always been an agricultural powerhouse. So when he made the decision that he wanted to go into agriculture, I mean, that was a destination he was interested in exploring. He was always, a traveler. He was, I guess, a risk taker, entrepreneur, and was keen to explore new regions. He had also met my mother, but that was in 1980, I think, 1979. And she was from Argentina, so that was something that probably played on the mind of starting something over there as well. I don't know, John, if you want to add anything else?
Yeah, I think that's pretty well it. And yeah, it started with one farm and grew to half a dozen.
Yeah.
Incredible. And tell us about your early exposures to the business, if you could, Markus.
Going back in terms of my upbringing, and I guess we'll talk about that. But I was born in California, raised between California and Argentina, and I think my early exposure was really growing up partly on the farm over a period of years. Not my entire childhood, but definitely for extensive periods.
Schooled on the farm.
School on the farm, yeah. It was a little, I guess the main farm that we had closer to Buenos Aires called Las Balas. It was beautiful farm that had dairies and livestock and cropping as well. Well, eventually had cropping, but it had a school on there, a public school, and I was able to be brought up there. Yeah, it was very grounding.
And the travel between California and Argentina, how different were the two cultures and the two countries, and what did you learn in those sort of formative years? Super
different, obviously. Argentina still today is considered an emerging / frontier economy, and California was what it is. I think I'm very grateful for that experience of being able to go between California and Argentina and experience two different polar opposites of how you potentially be brought up. Two languages, obviously, I speak both fluently, and I'm very grateful to have been able to do that. But I think for me, it was really Living in Buenos Aires was not what I enjoyed about being in Argentina, living on the farm at those times and just being a kid on the farm. And, these are very young years, I was, between 2 and 10 at that period. So, you can't fault it in terms of a lifestyle experience growing up as a kid on a farm. Yeah, and I wish I could have that with my children, but it's not going to be the case necessarily.
Things are certainly different now. Johnny, I want to bring you in. You joined the business as Chief Operating Officer in around about 91. Tell us about your upbringing, if you could, and then how you first came to be involved in Twynam.
So I spent a lot of holidays on the farm sort of from the early 70s. Always interested in the farm. Horses was always an integral part of what we did on the farms, etc. I actually became a director of the company in 84, I think, or 85, something like that. And Dad was always very open about sort of business, and from when I left school and even before that, like talking bits and pieces of what was going on. And then I went to university, did economics at Armidale, and then I did a master's in the US and worked for sort of a year in the cotton trading business in the US, but also in South America with them, which was a good eye-opener. And came back from doing my master's and sort of stepped into the day-to-day operation of the business. We were large, one of the largest, and we grew from there quite a bit.
And the 90s was a pivotal period for the business. There was a bit of trading going on, selling out divesting rather of some assets and acquiring of other assets. When you joined as COO in 91, you'd obviously, as you said, you'd been a director, I think, since 85. But what were some of the key activities that you were involved in throughout that 90s period?
Well, as you said, we were buying and selling a lot of stuff. So that took up a chunk of the time, especially when we bought Collie Cotton. We had the cotton trading business and the extra cotton gins. That was cotton. We handled like 25-30% of the cotton crop back then. Wasn't particularly profitable, and that's why we shut it down over time. It was a high risk, low return business, and eventually we said that doesn't make a lot of sense. And obviously just trying to make sure the day-to-day operations of the farms were where we wanted them to be. But we also did a lot of pioneering. So we pioneered cotton growing in southern New South Wales, at Hillston and in the Riverina. Like today, that's a $700 million industry or whatever it is, and we were the first ones there. So pretty proud of what we achieved there. And we did similar in Argentina, like Finca Derecho, which is a property in Salta, was just scrub country and became a 30,000 hectare irrigation property.
We'll touch on it later, but innovation's been at the core of the business for so many years now, for decades actually. But what do you think drove that innovation or that innovative mindset?
I think so. A lot of Dad had that vision of sort of what we wanted to do in Argentina, but sort of when you're back in Australia, that sort of that frontier leading. As we did, some of it came from Dad, but also I had that interest, I guess, just trying to do things differently or better. And it was to our detriment, really, because a lot of that early stage trial and error cost a lot of money. So a lot of people sort of looked at it and went, what the hell are you doing that for? And if it failed, and they go, I told you so. And then like half a dozen years, 10 years later, everyone's doing it. So look, it's what we like to do. I still do the same today in different fields. Like today, my business is about investing in really early stage ideas for decarbonisation. Like that's our core interest. We have like property and other things which have a bigger chunk of our money invested, but it's not where our day-to-day passion and interest is.
I mean, just to add to the innovation side, I think it's part, again, Dad, being an entrepreneur and I guess that coming down to Johnny and ultimately to myself as well, that was always important to both businesses, Twynam and LEAG, and it was spread through the culture of the teams and the executives that subsequently continued to run the businesses. And I guess speaking to Argentina, it was very well regarded that it was one of the greatest innovators in terms of operations and taking on new technology whether it's seed genetics or machinery, we were always kind of a front runner with that.
Just before we move on, Markus, you moved to Australia in 2001. You studied at the University of Sydney, and then you went on to become an executive director of the business, I think, for a period of 4 or 5 years, from 2005 to 2009. Firstly, the move to Australia, challenging? Was that a sort of a challenging period of your life? Did you tell us about the sort of journey?
Yeah, so I mean, my whole childhood was schooling between the US, Argentina. I had periods, especially when I was at school on the farm, it was in Spanish, but throughout secondary school it was all in English, under US curriculum, whether it's international school, Buenos Aires, or back in California. So I actually did a year in Argentina before I moved here, did ag science, tertiary education, Spanish, and that was actually quite challenging. So I felt like I was already on the back foot in terms of my education. So I said, I might move to Australia. Having said that, and probably Johnny's smiling here, is that I had met my wife today, Sally, back in 1999. Between moving from the northern hemisphere to the southern hemisphere, I had an 8-month, sabbatical between starting university, and I had met her, and I guess that was another factor.
Pushing you to ask her on that date either. Or maybe I need to pay you in.
There's a few people that would be arguing who was the instigator of that date, but no, ultimately, I think Argentina was also going through what they call the peso crisis of 2001. It just wasn't the same place, and I think people fall in love with Australia for many reasons, and one of it's just the lifestyle you can live here versus over there. And I did not want to be in Buenos Aires. That was very clear in my mind, and going to university and being on the farm wasn't going to work either.
Johnny, just to give us some context to the size and scale of the business, I think by mid-2005, thereabouts, there was 400,000 hectares of land in Australia, 80,000 odd hectares in Argentina, operations clearly in cattle production, in grain, in cotton, to name a few. Tell us about the size of the business by the early thousands up to, say, 2010.
So I don't remember the actual years because, as we said, there was plenty of turnover of bits and pieces, but yeah, 400,000 hectares, so we're the biggest landholder in New South Wales. We're the largest irrigator by a fair way, number 1 irrigator of cotton, number 1 rice producer, top 10 wheat in the country, top 10 sheep in the country, top 20 of cattle and feedlotting. We handled a quarter of the Australian cotton crop. We cotton gin, I don't know what the percentage was, probably 5 to 10% of the crop. Argentina back then was, I'm not sure, like today, well, before most recently, it was sort of producing 300,000 tonnes of crop. We weren't doing that much back then. It would have been a couple 100,000 tonnes of crop and a bunch of cattle running around. We were still developing the Argentine irrigation projects, and we entered into a new one up in the north in a different province, and that didn't work out. So we were busy, just travelling around, looking at opportunities.
I think the scale, the farms. I guess a lot of people compare them to the Northern Territory or Northern Queensland farmland. But what's forgotten is the intensity of the farm operations as you come further south and you get into cropping, become much more intense. So the area might not be easily understood in terms of the amount of production that was generated out of those farms. And Argentina, similarly, I mean, it is an extremely intense farming operation, and you get 3 crops every 2 years, with rotations and so forth. So you don't get that really anywhere else in the world, other than maybe parts of Ukraine and some other black soils area. So you can still grow a crop in the summer, you can grow a crop in the winter. You can't do that in many other locations. So yeah, just the intensity, I think, of what we were doing is something that was quite unique.
Correct me if I'm wrong, but in about 2009, 2010 thereabouts, the company decided to divest of a lot of its assets. Obviously, there was the water entitlements to the federal government. There was the sale of land to Macquarie Pastoral, and quite a number of other activities. What made that time or that opportunity the right time for the business to begin to diversify into other streams and sell down a lot of its traditional holdings?
Yes, I mean, I think the government had put out a tender to buy 500 gigalitres of water for environmental flows, and we were the largest private owner, and we knew that it was a bit of a drag on our balance sheet. It was worth a lot on our balance sheet at that time, with the decoupling of land and water in New South Wales, and we just saw a great opportunity to be able to liquidate that portfolio and potentially treat water as an input rather than an asset. If there was water to be used, it was going to be cheap. If there wasn't, it was going to be expensive, and again, the drag as an asset. And I think once that decision was made, that probably led into, the decision to sell down the farmland assets as well. But
to me, it was actually driven more so by sort of the impact of Australian agriculture, of that flood drought cycle being stretched as far as we were across the state. Like, we were always in drought or flood somewhere, and that so it was 24 properties, a lot of capital. Profit was nothing to write home about overall, and we went, well, do we really want to be so into ag? And we thought, like, we've always had an environmental bent in everything we've done. That whole water, rivers were definitely over allocated. The governments did a shit job managing water allocations. When they originally did it, they gave water and you're meant to develop it within 3 years. That didn't happen with most of the licences. They were called sleeper licences. Government had an ability just to tear them up. They refused to, so everyone who actually spent the money developing got diluted down over the years. When these guys would hang on to their water for 20 years, not do anything, then go sell it to someone who wanted to use it, and it just became harder and harder. And so the rivers were poorly managed, didn't have enough water flow, and we went, well, we can kill two birds here. We can get some cash off the table. We knew at that point that there'd be a number of the farms that we would offload. And then once we started offloading some, we went, well, do we actually want to be there sort of in this middle scale? And we went, yeah, probably not. And we did a family reorganisation and just continued. And I had 2 farms until 3 or 4 years ago, and someone came and knocked on the door, and I went, well, I don't see the value in those farms there, so I exited then. And so today I've got a couple of what I'll call small hobby scale type farms just south of Sydney.
So that's the background and the history of the group. Let's now move into both of your careers and into your investment philosophy and some of your other activities. Markus, BridgeLane Group, seeded I think in around about 2009. Tell us about the business, what it does and how it's evolved over the past decade or so.
Yeah, I mean, it's, as John has said, it was in 2009 we were able to reorganise how the family was structured. We took the view that there's only 2 second-generation members of the family, and John and I would be able to kind of have these 2 family offices and effectively control our own destinies and be able to do what we felt we wanted to do with our respective families. So effectively, BridgeLane became a family office, even though I never called it that. I guess I didn't feel like I earned the merit to call BridgeLane a family office, but it's no different than any other one. It was a diversified asset investor. It was, I still had Argentina at that time, so we still had farmland as our core component of our portfolio up until 2022. We had some real estate, commercial real estate. We also had some cash, and we started deploying the cash into things that I thought I knew about, growth investments, but actually I didn't know very much about. Mining exploration and mining development stocks and a bunch of things that I put in. But I did make some early investments into some technology companies and cut my teeth doing it back in 2009, 2010, and was lucky enough to come across some good ones, which that really started I guess, more formal thesis of investing in innovation and venture capital.
And why technology? What did you like about that asset class, and what were some of the, or what have been some of the key wins that you've had?
Yeah, I think it's more just the personal curiosity. Just always curious about new things, about what else was around the corner, and just how, I think we do all as a family have an entrepreneurial mindset, and I think that kind of enables us to gravitate toward new things, and technologies, I guess, in my life was something that I was interested in. The first investment, I guess, of note was one that came on my desk. It was called a Mason. It's actually called Compass back then, which is a mobile virtual network operator in Australia running off of Optus wholesale towers. And what was funny about that is it was pre-launch, was first investment meeting. We led the first round of funding, but at the same time I got something else on the desk, which was a lease proposal from Compass Telecom to take up a couple floors in the building. And I thought, well, this is interesting. I could actually just hedge this one off, and on one side, take the rental from them. They were quite aggressive in how much they wanted to occupy, and obviously flip that around as an investment as well. And it ultimately became a great investment, great set of founders, great story on how they executed. It wasn't our best win ever in terms of overall multiples, but it was a very well thought out investment. Some other winners came out of that. Airtasker, which was one that's I'm very happy about, and the relationships I built with Tim and John, the two founders out of that, were great, and did many things with them subsequent to that. Founding Tankstream Ventures, which was a venture fund. With them at that time, we invested in a company called Go1, which is still around today, and that we led the first seed round in that, and the first couple of rounds subsequent to that at $5 million pre-money valuation, and now it's worth $3 billion. So, we definitely think that we can. I personally think I've got the knack to be able to pick these kind of early pre-revenue companies. So I find that exciting. Yeah.
Similarly for you, Johnny, you've carved out your own pathway through Twynam Investments, your family office that focuses on a number of distinct areas. Let's start with your approach to investment. What areas or sectors interest you most?
So we have a chunk of real estate assets, generally regional, couple Sydney CBD or near CBD assets, but generally most of it dollar-wise is sort of in regional subdivisions. But is that something I love? It's not something we do more than love. The environmental space is what sort of interests me a lot more, and we spend a lot more of our time on. Everyone talks about global warming, et cetera, et cetera. Well, I went to COP4 in 1998, so been into it for a very long time. We did investments in 2000 with CSIRO, trying to find a vaccine for anti-methanogens, which is what creates methane in ruminants. So today, we're early stage investors in decarbonisation technologies that we think can make a real impact in emissions. So whether that's sequestering or reducing emissions, so it could be a new way of making cement, or a different air conditioning system, or way of managing waste so it doesn't end up in landfills, etc. We're laser focused on it, and I just launched a fund a couple of 8 weeks ago or so to see if other people want to come along the journey with us. But there are a lot of funds starting to get involved in sort of decarbonisation, anti-global warming, etc. But not many have the sort of focus and background that we have.
Why are you so passionate about it? Clearly, you can see the passion coming out of you. You've been doing it for over 2 decades now. What drives your passion for this particular area?
Well, I love the environment, like from, I guess, early days on the farms, and love being in nature. And reality is the human race, we're totally stuffing it, and there's limited time to fix it. The whole way the world measures how much we're succeeding by GDP growth is fundamentally flawed. The only way you get GDP growth is by someone buying more widgets. More widgets require more resources, and yeah, you can't beat it. So I think humans are too selfish to change their way of life. You get some, yes, you're like the 10% who'll totally change to make something better, but the majority of us are too selfish to change basically anything. So the only way we can save ourselves is by using less resources to make those widgets.
Markus, I want to ask you in regard to BridgeLane Group in particular. You mentioned some of the successes that you've had in the technology sector over the years. What are the investment fundamentals you look at prior to deploying capital in technology ventures or ventures more broadly?
It really depends on who the individuals are, but as an investor, I think the main thing is intuition, right? And you know, we can talk about what metrics we specifically look at, how we break that down, but at the end of the day, it's really getting to know founders, getting to know their ideas, understanding their vision, having a good, good intuition around the individual, the business model, and then diving deep into that and understanding it a bit more, making sure that it makes sense. Depends on the portfolio construct. You know, obviously, it's not just the one investment that's going to, need to be successful. It's actually the portfolio investments that together need to be successful. So if it's a power law theory that you're trying to go after, which is every one investment needs to be a fund returner, then you have to assess that business that you're looking at to make sure that it is a fund returner, even if it's on paper at the very beginning. If you're more of a concentrated investor that's looking for higher conviction bets, smaller portfolio, then you can afford to have a smaller market size, but most of them need to turn out to be something rather than nothing at some point. So, I mean, it really does come down to, a mix of everything. There's no one trick, but I think really intuition from the investor side and seeing the personal characteristics in the founders when we look at them and making sure that they're, that they've got hustle, that they've got, subject matter expertise, that they're able to build teams.
And you referenced Amasim and Airtasker before. What do you think made those two businesses successful in and of themselves? Was it the leadership? Was it just timing? Was it the product to market fit? Was it a combination of many different things?
Yeah, it's a combination of many different things. I mean, Amasim, particularly great leadership, a team that had done it before in Germany, brought to Australia by another guy named Peter O'Connell, who's, Optus background. So just very strong leadership, very strong team, very clear plan. Airtasker was much more novel. It's a gig economy marketplace. You need to build a supply side, you need to build a demand side. Very hard, always kind of going against the grain on that and having to build something that was quite complicated requires a certain amount of determination in the founder. And I think those two guys, Tim and Jono, they were quite unique in terms of their attributes. Didn't need to build a strong team from the very beginning. I mean, it needed to be a strong team, but it wasn't a big team. So, they eventually had to learn that as they progressed to build, bigger and stronger teams that could actually become more of a corporation. Yeah, and then, again, Go One, which is, still very much, a winner for us and huge, and those guys as well. Andrew and Chris have built exceptional businesses out of nothing, really, from the beginning.
Johnny, in the same vein for you, what do you look at when an investment comes across your desk, particularly in the area that you're investing in? You'd get so many different proposals. You referenced the new fund that launched 8 weeks ago or so. What are you looking for in some of these ventures?
So looking for impact, like what do we think the decarbonisation impact will be? So, and there are lots of ways you can look at that, but we do look at like true impact on, is it going to actually make a difference if it's successful? And the other real thing is what we think the founder and the team can do. And the reality is, like a lot of what we're doing is very early stage, so it's like the mad professor comes up with something, and how does that person perceive themselves evolving over the next sort of 3 to 5 years as the business hopefully is successful and needs to grow, and because the skill sets change so much. So is it somebody who sits back and acknowledges, yeah, look, I'm here for 2 years managing the whole thing, then I need to step back as a CTO and get someone else in as the CEO or whatever, depending on the skill sets, etc. So how open they are to evolving with time, and And something we've really learned is sort of what control mechanisms they have over the business, because potentially you evolve down 3 years and what they sort of, what we thought they were going to do, they don't do. And if they've got all the control mechanisms sort of tied up with the board and voting shares, etc., you really can't influence a change. So it's really important for us to understand things are going well in the business or not going well in the business in 3 years. How do we actually, or how do the various incoming investors manage the direction and the people to grow and be successful?
For investors that aren't subject matters in this field, clearly there's so many different funds, everybody's talking about decarbonisation and how to reduce impact. How do you distill the noise from reality, and particularly for investors that want to invest in the fund? How do they make sense of it all?
Look, I think it's really hard. So especially as a new fund, like without track records, and like we've got a track record of investing but not in a proper fund structure, and like you can't just pick and choose which companies, but we have been running sort of a proper fund the last 3 years, but that's the only thing we can sort of point towards. So that's a real difficulty in getting people to put money forward, but we've gone in with a real quite low minimum, so people can put in 100 grand and then come along for the ride. If they like it in a few years' time and we're doing another fund, hopefully they'll write much bigger checks. So all we can say is we have track record. I'm passionate about it. You don't get many people who've been doing it for the period that we have and continue to do it. So yeah, there's a lot of trust by an incoming investor on what I believe in.
Markus, I want to ask you about the Australian technology landscape. Clearly it's evolved so much over the last 14 years or so that you've been involved. What have been the key learnings and the key changes in the landscape that you've noticed?
Yeah, I mean, it feels like a long time, but it's actually not really. I mean, since 2010, 2012, I would say is when, I guess, the new era of venture capital really took place in Australia. It's not like venture capital as an asset class was new. It's always existed. But I think in terms of who we see today as operators in terms of investing, a lot of the funds that are very active today, and especially the larger ones or the mid-tier ones, they started either in 2012 or after. Same, I guess Tankstream Labs, and we touched on that earlier, conversing is, it's a co-working space that, started out in 2012, there really wasn't any co-working in Sydney other than Fishburners. That was pre-WeWork. And if you just think of WeWork, where it started, where it got to it being a $40 billion market cap company to now being worth maybe $250 million in that period of 10 years, it's just gone up, down. But co-working is here to stay. And I think that just symbolizes what's potentially happened in a 10-year period in the ecosystem as a whole. You've got things have just evolved to the degree that probably nobody probably would have understood back in 2010. I think it's been very successful and standing on the shoulders of other successes as well. You've got great stories here, starting with Atlassian, Canva, the ones that everybody knows about. But I think, yeah, it's definitely changed. But we're a long way away. We're a long way away from obviously the big markets in the world. We're a long way away from being top 5 or top 7 venture market. And I think there is a motivation to do it. There's an impetus to do it. I think the government also has a desire to do it, and I think eventually Australia will be a top 5 player in terms of venture and innovation.
Tankstream Labs launched into 12, and then I think a year or so later came Tankstream Ventures. Just take us inside how that occurred, how that business occurred, how that deal occurred, and then where it started and where it ended up.
Yeah, I mean, that was quite just serendipitous, really. I mean, I invested in Airtasker, and the two guys needed some space, had some spare floor that had nobody on it. So I told the guys, why don't you just take this corner? A bunch of people would come in and visit them and say, hey, this is a pretty good little office space. Can we set up a desk here? And we're like, yeah, there's actually something to be had here. So, with Tim and John, we also set up Tankstream Labs, and then subsequently thought that maybe this is a good way of getting our foot in the door and becoming known And that rolled into, well, we can set up a structure here and set up a formal fund under an ESVC LP, which is, tax-free gains up to a certain level in Australia. And just seemed like a wise decision. And it's worked out great. Obviously, the fund is sitting on some good returns. We never built out a second fund, but that's what I'm doing now with Side Stage Ventures. We all got distracted, really. Airtasker was obviously, a great journey for them. I built a company called BrickX in the property space, which I can touch on a little bit later. But now I'm really committed to building this new firm with Side Stage Ventures and the partners that are involved in that.
And what's the focus for Side Stage?
Yeah, and it's an early stage fund, sector agnostic but stage specific, pre-seed, seed. Very much trying to help founders from that 0 to 1 journey. We're not precious about being on the board. We want to have a high degree of helpfulness to the founder. We actually Ben uses the term of helpfulness to check size ratio, and we want to have the best helpfulness check size ratio out of any other investor. And we'll keep trying to find that top 1% of founders in Australia. So yeah, you can't be a vertical investor in an ecosystem that's so small in Australia. I believe at this point, it's just there's not enough deal flow. So if we want to be in the very best deals, you have to be sector agnostic.
In our business, we don't find a lot in Australia as yet. It's certainly the flow's increasing dramatically in the last sort of 18 months, but it's still, most of our flow is offshore at this stage.
And why do you think that is? Are we that far behind? Do we just not have the mass?
On the environmental side, I just think probably with the political crap which was going on for so many years of no clear direction on, yes, we actually believe in global warming and let's try and do something about it. No point naming names, but I think that was probably a negative to people going, oh yeah, decarbonisation, let's really get into it, and that's obviously changed in the last sort of 2-3 years.
And where do you think it can get to? Can Australia become a leader in that field?
Depends on the individual. So there are smart people everywhere who comes up with the best idea on how to produce electricity or to decarbonise steel or cement. I've got no idea. It'll be, sure, you've got the opportunity to, but whether that really smart person has comes up with the idea and got the dedication to make it happen and knocks on the right doors. There's smarts and there's a whole lot of luck and on the way as well. I don't think there's a person who's really successful in life who hasn't had a bit of luck.
Now, we run a property business, so it would be remiss of me not to ask you both about property development and investment, in which you've both been invested in for a long time. Now, what attracts you to this asset class? Perhaps starting with yourself, Johnny.
I got involved in the GFC when it was cheap. That was it. That's where I started. Pretty much all the assets I own in property were bought there or soon thereafter. Yeah, well, I've bought a couple of things since then, but that was, yeah, and we got involved in a construction property development business in Queensland, so we actually ran a construction business there for a number of years, got out of that. It reminded me a bit of cotton trading. Yeah, but look, I guess the frustration in that whole property business, like we've got a subdivision in now, 13 years we've been working on getting the approvals, and if I put the layout on the table, it's hardly changed in 13 years. And when we purchased it 13 years ago, we were thinking like, sell a block for $120,000, now it's 350,000. The only loser is the average Australian, and we can't keep having the immigration rates without creating housing. I know it's in the press now, but we've been talking about it personally for like 10 years. Like, it just makes no sense. Something's got to change. Someone has to give NIMBYism, councils. We've got a project north of the harbour where council wants a commercial, it's not profitable commercial, it's in a high demand area right near new metros. You just go, like, it's madness. Something has to change, and I know everyone's been saying it for a bloody decade, but it is what it is, and the cost of housing in this country is absurd. And that also goes to some of the tax breaks you get for owning houses, which I don't think are fair, because you can't expect people who are working 40, 60, 50, 60 hours a week and struggling to pay for accommodation. Like, that's just, I don't think it's right.
Fundamentally, the reason we're invested is I guess there's just two main reasons. And anything that's excluding residential, it's really because I think it's a great wealth preserver. And I think, if you include farmland in the bucket of real estate, what our father did was a great example in hindsight of what, farmland can do in terms of wealth preservation over a period of, 4 or 5 decades. And I think, commercial real estate is in a similar bucket. The lower the income generation, typically the better the wealth preservation. In terms of residential real estate, it's the opposite. I saw, an opportunity that, the returns were attractive. I actually didn't know anything about residential real estate. When we started getting into it, we've done 10 projects to date, and I had to tap, some friends that I knew that were in the industry and very knowledgeable about the industry to be able to get into it as a developer. And BridgeLane's gone on to do 10 sites. To date, all in Sydney, all in areas we know, within 5 to 7 kilometre radius of the CBD. Like, we stick to things that we know, and just don't want to get suckered into going in areas that we're not fully comfortable with. So I think that it's just the main 2 buckets. And when I look at the family office construct of BridgeLane, I look at it very much as like, what's my preservation bucket and what's my growth bucket, and I split them out. And real estate's in that preservation side.
When I don't look at any of that at all. I have zero allocation strategy or whatever. We just, what feels good or of interest on a particular moment is what we do.
And clearly, you referred to it earlier, there's been challenges from a planning perspective. What have been some of the learnings, other than the difficulty of the planning system through investing in property?
Just make sure you allow for it in your numbers. Really, like, there's nothing else. You have no idea what the timeline's going to be. Like, you'll speak to the planning expert and say, oh, this will take 3 years, or they have actually no idea. Like, you can say, in theory it's meant to be 3 years, but it could be 6 years, it could be whatever. You might get lucky and it's 3 years. So obviously you buy something with planning approval, it's pretty simple. But if you want to sort of go further up the risk curve, well, you just need to understand where it is. We're lucky in Australia where the prices have increased. I've done projects in Europe where I had issues with planning or etc. And like, you're carrying cost, but your sale price at the end is no different. So your margin's gone to zip. So yeah, it's an anomaly in Australia compared to the rest of the world.
I think, when we look at any of those development sites, it's different. I mean, it's going up the risk curve, as Johnny said. So, I mean, we were prepared to not go up the risk curve. Property development is still risky, obviously, but we wouldn't be looking for new rezoning sites. We just would buy smaller boutique sites that would, fit into, I guess, a premium small floor plate residential development and work within the the controls that were in place. And never push the boundaries. So be able to put it down in Excel and actually work it out without having assumptions made about the future. Obviously, sale prices would have to play off, and then your cost of construction would have to play off, and pre-sales. But everything we did was pre-sales, and never had an issue with the banks, and they were always very supportive, and we were able to do that and play within the guardrails quite well. But even though we think that they were amazing developers and great returns, you sacrifice a bit on the upside if you do it that way.
And what's your appetite like for investing in these sort of projects at the moment, and has your allocation been reduced as a result of construction price changes, or are you more bullish on where it can end up?
I mean, BridgeLane is not looking at developing any more residential sites at the time. The team has actually disbanded a bit. They've gone off to do their own thing, and we just will continue to probably support them under their own umbrella rather than us be a developer. So I will look at residential, just real estate generally, as an asset class and see how I participate in that. But there's nothing that's specific to the current environment. Obviously, you have to take in like, I mean, I wouldn't go right now and go and pay 3.5%-4% for a commercial office building. Vacancy rates are real, and there's some serious questions around what's going to happen with the commercial real estate market.
Clearly, the returns on offer for commercial real estate can be very attractive. Do you see, in comparison to some of the other asset classes, do you see a long-term future for appetite in that sector, or the gains on offer from investing in decarbonisation or technology more attractive?
From my perspective, I wouldn't invest in a commercial piece of real estate because I just don't have a love for it, etc. Like, I managed this building, which is Markus's now, for I don't know however many years, but yeah, I just don't enjoy it. Markus likes it, so that's great.
You have to enjoy coming to work every day. And enjoy
it. I do go to work every day.
But I mean, enjoy what you do when you come into work.
Exactly. So, look, it might be way more successful in the long run, but I just don't care. There's only so much you can do with so much money, and kids need to work one day as well. So we've got a couple. We own half of Huntley, which is a 7,000 lot subdivision in the Hunter. So we've got plenty of exposure to real estate, and we've got a big block in, as I said, north of the harbour. So yeah, I'm happy with our commercial real estate, commercial residential real estate exposure, and yeah, we're sort of playing around with another project potentially, which is sort of outskirts Sydney subdivision, but we'll see whether that happens or not. But yeah, the decarbonisation is sort of a core interest.
Let's close out our discussion with a few more general topics. Johnny, perhaps starting with you, what have been the key learnings or lessons that you can share with us that you've learned throughout your career?
Having the right people is critical. I think that's the biggest thing, and I think when you think someone's not working out, you're best off cutting it soon. So often you'll go, well, people will say, oh, better the devil you know than the devil you don't, and that's good to a degree, but at some point, if you're really not comfortable with the person, you're better off getting rid of it or changing the person pretty quickly. I think that's the biggest thing I've learned. Do things you enjoy. When done things over time where you haven't enjoyed, like with any business, there are things in a day which you don't enjoy. Like, you've got to look at the accounts and all that whether that's once a week, once a month, or whatever. And unless you're an accountant, you probably don't like looking at the accounts. It's like great if it's big black number at the bottom and not red. That's a positive. But like, yeah, so you need to have that discipline to do the things that have to be done. But overall, you need to enjoy what you're doing, I think, to have any success in it.
Markus, from your perspective?
There's a few different lessons from different people. I mean, coming to the farmland thing, which I wanted to add earlier, is really, it's a lifestyle, not a business. Dad always said that from day one. I think we've all kind of appreciated that, and I will still continue to hone farmland, and Johnny as well to a degree in our portfolios, maybe to different levels, but I think it's important to our families. Dad always said, I don't care what you do as long as you're good at it. That always plays on my mind all the time, and I actually really value that.
I'm not sure even it's good at, but if you do the best you can at it.
I think Christine Campbell, who was, somebody who worked a lot with Dad, she's a bit older when she started working with me than with Johnny, but she always taught me the importance of governance, the detail, making sure that if you're delegating, you're still on top of whatever it is that you are delegating, and that's always been important to me as well. And then, I guess, coming down to generally, it's just on decisions, it's trust your gut and your intuition.
Key challenges for you both, what have they been, and have you been able to overcome them?
Not being, jack of all, master of none. I can easily get distracted and try and build some new business, or, get too involved in something that's too small and not really focusing. That's, was, I guess, worse in my younger years, but it's still something that's very true today, and it's a constant battle. So for me, I've, really set a target. I think I'm almost 42, a lot younger than Johnny, And I feel like I've got 20 years left of creating something, and then I want to pass it on to my children. I want to be the supervisor, the monitor, and move off to Europe and spend a lot of time there and do other things. So I've got this thing of what do I really focus on for the next 20 years to really be able to build something. And I think side stage ventures and venture generally is something I'm really excited about.
There are all sorts of challenges, and they evolve. If I look back on the last 40 years, there have been challenges vary all the time. I still go back to the biggest challenge is having the right people in the right jobs. Yeah. So whether you look at sort of trying to manage Argentina and like the complications in a country like that with inflations and government interventions and all those sorts of things, like having people you can trust doing that. Banking relationships, which have changed so much. Like 20 years ago, if you wanted to buy a building or a farm, whatever, you'd ring up Jimmy and say, Jimmy, I need 15 million bucks to buy this. Oh, send me over what you think the business do. You send over a spreadsheet, and a couple of days later say, okay, yeah, fine. It's changed so much, and so they're all how those things evolve. And like with every business, you get times when things are tight. In the old days, the banks would sort of support you. Today, they sort of tend to run. I think that's interesting. Like there was much more of partnership in the old days. When today, although saying that, I think it's somewhat improving again. But there was a period in there where you just went, I refused to put money in. Like when we had lots of cash, I'm going, well, I'll try not to even give it to the banks. I'll put it somewhere else so that the banks don't, because that pissed me off on something else soon previously.
I think that, the world is just a different place nowadays, and the interconnectivity between everything and the rapid pace at which media gets out and the way people can assemble things and so forth is just going to be a challenge generally, because we are living in I guess I would probably say a challenging environment, from conflicts, from social issues, from I guess
home and all that. So that's it's always a challenge.
So I think just general on a macro point of view and just societal point of view,
it's not a tough time. Everyone in Australia, people are better off today than they've ever been. So you can't actually say it's a tough time overall. No. Some people, well, even globally, people are better off today than they've ever been. Look at everyone in India. Every Indian's better off. Well, everyone. Like, I'm sure there'll be some who aren't, but Indians on average are a lot better off than they were 5 years, 20 years. Probably the Russians and the Ukrainians not, and some of the poor Sudanese not. But in general, most of the world is better off. They've got more stuff. There's less poverty, better educated. We all say it's a tough life, but I don't think it's any tougher than it was previously. It's a lot different, and I don't like a lot of the changes we see. And when people start telling me I'm meant to put after my email a him, her, them, they, whatever, I'm like, fuck off, I'm not. So the pressure on trying to conform to what maybe a minor majority of people think we should be doing really annoys me. Like, everyone's meant to be able to have a say on what they think without being pigeonholed as racist, sexist, something-ist. I find complicated.
I want to ask you about that. In fact, two questions to finish. What are the long-term opportunities for Australia? What's our competitive advantage? You both travel widely, so you'd see Australia in context to other countries, but vice versa. What are the long-term hurdles or challenges that we have to get over as a nation if we want to keep growing and be productive?
I mean, I think we all know where we come from a natural resources point of view, and even ag to a degree. I think I mentioned it earlier. I think we do have a big role to play in terms of innovation. We've got a very educated workforce. We do have migration issues, and we need to improve that. But I think there is a part where we can become a large exporter in terms of our GDP, in terms of services, innovation, rather than just services, and obviously mining and agriculture. So I think that's an opportunity, and I think whether people like it or not. I mean, probably defence is going to be something that's going to happen if it plays out as per the government's desires over the next sort of couple of decades. That'll become a big industry as well.
I think the positives are, as Markus said, the negatives or the issues, the concerns are housing. It's hard to see how we expand population and overall welfare of all Australians without housing getting into a better equilibrium. High house prices, high rent prices mean you need higher wages. If they get too high, well, you're not competitive worldwide, so really better off with a more median sort of house price or accommodation cost so that you can be competitive. And yeah, that union impact on where some costs go, like you see, like the roadworks, the lollipop sticker. Apparently, I think in New South Wales the average cost pay is $28. If it's union, it's sort of $80, and in Victoria it's $130. So how can someone holding a lollipop get paid $100? It makes zero sense to me. Those sorts of things are the concerns. Every country probably has them, but when you know you've got an issue, you probably should try and do something about resolving it. The housing price is not simple though, because it impacts a whole lot of people and tax benefits, and we've seen over the last sort of half dozen years the political discussions about it and how vehemently opposed certain groups are.
I mean, I think, you know, we've had high labour costs comparatively to other countries for a while now, and I think, you know, we should just continue to look into what we maybe have a competitive advantage in, that is, you know, again, innovation in robotics, and, you know, even today with artificial intelligence. What can we build on that we just don't need the manpower to do it? And that'll put us much more on a level playing field if we can do that.
Johnny and Markus Kahlbetzer, pleasure having the opportunity to have you on our program. Thanks so much for sharing your journey and your insights.
Thanks, Rob.